Alrighty. Welcome, everyone, and happy Women's History Month from all of us here at In Touch Credit Union and Silver. My name is Josh, your host from In Touch Credit Union for today, and we are welcoming back Silver for their second webinar with us this year. They are highly popular and in much demand, so we're glad to have them back. Today is going to be Women and Social Security. And we have Rhian, who is the CEO of Silver, which provides members of InTouch Credit Union with retirement calculators, tools, and education through their Retirement Simplified program. Prior to founding Silver, Rhian worked for 17 years at JP Morgan, where she advised individuals and families on investments, credit, and wealth planning, and helps people even like me here at InTouch Credit Union. We're excited to have her with us here again today to help you learn everything women need to know about Social Security in their 20s, 30s, 40s, 60s, anytime. So without much further ado, I introduce our special guest.
Well, thank you, Josh, so much for hosting us today, and great to be here with all the In Touch Credit Union members. As I kick off, I did want to let you know that we are going to save at least half of the time for Q&A. We often find that many members who dial in have a very specific question they want to ask, and so I want to just let you know that we will be supporting Q&A. You can drop your Q&A into the Q&A function, and as we get to the end, Josh is going to start reading it out, and we're going to really make sure that not only do you get this baseline education, but you're getting the answers to the questions that are on your mind. So again, the topic today is what every woman needs to know about Social Security, whether you're 20, 40, 60, or beyond. Before we do that, I want to just quickly introduce Retirement Simplified, which is powered by Silver. As Josh mentioned, we have a partnership with In Touch Credit Union where we have this amazing member benefit where we provide members with access to a lot of retirement education. At the heart of what we do is we help you understand how long your savings will last in retirement. We call this your retirement score. We calculate how long those savings will last and include things like Medicare, Social Security spending. It's also really personalized to you. So based on your specific fact pattern, really make sure that you're getting the guidance that you need to make key retirement decisions. As part of what we also deliver through Retirement Simplified, we have a deep set of retirement education. This is 3 to 5 minute lessons that are part of our retirement school on every topic you could possibly think about around retirement, Medicare, Social Security, taxes, cost of living. I flag this because the webinar that we're going to host today is actually our newest class, which is all about Social Security for women. So what I want you to know is that you may find yourself wanting to take a lot of notes, but rest assured, the class is actually in the experience. So the easiest thing afterwards is just going to be go to the itcu.silver.com link, and you can access the class and get all the information there. So let's talk about what we're going to cover today. We're going to talk about the basics around how Social Security works. We're going to talk about marital status and how it impacts Social Security. We get a lot of questions about that. If any of you are public sector employees, we're going to talk a little bit about some of the special rules that impact public sector employees. We're going to talk about part-time work and Social Security, whether it's pre-retirement or post-retirement. We're unfortunately going to address that Social Security is a tax, and we're going to talk about a little bit about kind of how the math works there. And then finally, I'm just going to wrap up on some key things that you should know if you're in your 20s, your 40s, and 60s, because really, I think a lot of the members online today are probably getting close to making your Social Security election. But I really also want to make sure for members that are younger that you understand some of the key life choices that you'll be making in your 20s, 30s, and 40s that will actually impact your Social Security. So let's start with kind of the basics on Social Security. Social Security, you probably know if you've been paying taxes into the system, once you had a job or your spouse has been paying taxes into the system. Social Security is a really important part of your retirement security because it is a guaranteed source of lifetime income. For most members on the phone who don't actually have a pension anymore, Social Security you can think about as that pension or that annuity that is going to be there whether you live to 80, 90, or 100. One of the real benefits of Social Security is that not only does it provide lifetime income, but it actually has an annual inflation adjustment. So last year we saw a record 8.7% increase in Social Security benefits as a result of the annual cost of living adjustments. We'll talk about this a little bit more, but as you think about Social Security, there are spousal and survivor benefits. So this is really a decision that if you are married or were married, you really should be thinking about the choices you make, not only for yourself, but also how they might impact a partner, because they may rely on your benefit post your passing. So at the start, I just want to really just double tap on how important Social Security is from a financial perspective, because sometimes when we see monthly cash flows, it's really hard to think about well, what does this mean over the course of my life? If your benefit is $2,500 a month, that's over a $600,000 lifetime benefit. When you think about living, let's call it for 25 years and receiving Social Security. So it's a huge sum of money. For many members, it might be their largest retirement asset. And so that is, I would just say, one of the reasons we take Social Security seriously is it's a really critical part of most of members' retirement planning. So we're going to start talking about full retirement age and when you can actually elect Social Security. You can elect Social Security between the ages of 62 and 70. The age that you're eligible for your full benefit, so 100% of your benefit, is what's called full retirement age. That age has changed over the years. And for most members on the phone today, that age would be 67. There may be a few members who have a slightly earlier date just because they've been grandfathered under prior rules. But for the majority of you, your full retirement age, when you can receive 100% of your benefit, is age 67. If you elect your Social Security early, what you'll see is that your Social Security will be reduced. It's reduced by about 8% per year. So the example we have here on the right-hand side just shows you that if your full benefit was $2,500 a month, if you elect early at age 62, the benefit would be $1,750. You can also delay your benefit as late as age 70. And in that case, you receive an additional credit for delaying your benefit. The election benefits are actually done on a month by month basis. And so I've just shown you 3 specific ages, but I would just flag to you that, if you decide to retire at 63 and 3 months, it will be prorated based on that 63 and 3 months. This is a really important thing just to double tap on, which is clearly delaying later gives you a greater benefit. But I think what goes through a lot of members' minds is, how long do they think they're going to live? What other income sources do you have? And is it worth delaying your benefit? I would just flag that, if you have longevity on your side, like in my family, the women live into their hundreds. Delaying Social Security can be a really great way to provide that additional income later on in life. If you don't have longevity, or you and your spouse don't have longevity on your side, those might be scenarios where you think about electing early. So as we think about this foundation of Social Security and why in particular it's important for women, it is for most of us the primary source of lifetime income in retirement. Women are expected to live 3 times longer than male partners. And so if you have a male partner, just factor in as you're thinking about Social Security, that's more likely you're going to be the one that has longevity on your side. It's also a real fact that women are 10 times more likely to depend on survivor benefits than men. So it is likely, again, if you are married, that at some point you may be depending on survivor benefits. So this is where the joint decision making is really important. So for eligibility, let's just talk about eligibility, and then also we'll talk about, based on marital status, how Social Security works. So you're eligible for Social Security for full benefits once you've worked for what's called 40 quarters. That's basically 10 years. The 40 quarters is a technical term that Social Security uses, but basically you need to have 10 years worth of earnings history to qualify for a full Social Security benefit. Your benefit is calculated based on your highest 35 years of earnings. If you take time off or you didn't work for a full 35 years, basically what Social Security will do is they will take your earnings history. And if you've, let's say, worked for 20 years, the final 15 years, they'll add zeros to your earnings history so that they can calculate your average earnings. And again, if you're single, obviously the benefit is really based on your earnings history. If you're married, the nuance I would just flag for you here is that, again, eligibility for your own earned benefit is based on 40 quarters or 10 years of work. But your benefit is actually calculated based on the higher of your earnings history, or 50% of your spouse's benefit. It's not additive, meaning you don't get both. You get either your earnings benefit or 50% of your spouse's benefit. For members that are divorced, again, your benefit for yourself from your own working history is based on that 10-year track record. Your retirement benefit, however, is based on the higher of your 35 years worth of earnings or 50% of your spouse's benefit if you were married for 10 years or more and have not remarried. So this is really important. And you may not have been aware of this, that like if you have been divorced, if you are divorced, that you are eligible for effectively a spousal benefit. It is not that your ex-spouse is giving you part of their benefit. It's just you are eligible for that from the government. And the key thing there is that you need to have met that 10-year mark and not have remarried. For widowed members, again, your benefit based on your 10 years earnings history. But if you're widowed, your benefit is based on the higher of your 35 years worth of earnings benefit or 100% of your spouse's benefit. So I'm just going to flag this. When an individual is married, the spousal benefit is 50%. But if your spouse dies, your benefit you're eligible for 100% of your spouse's benefit. And this is where, as you think about later on in life and thinking about kind of the insurance you might need, this is where Social Security becomes pretty critical, because the choice your spouse made to elect early or not really impacts your benefit as a widow. And so I would just say that this is like a very, very important conversation to have if you're married, because you really want to make sure your spouse understands that their election not only impacts their benefit while they're living, but it impacts your benefit as a spouse after their death. Let's talk about public sector employees. So many public sector employees receive pensions, and those that receive pensions may not be eligible for full Social Security benefits. We're going to talk about some of the rules that impact government employees, but I would just start by saying, many government employees who hear this ask, like, am I eligible? And fortunately, I can't tell you whether you are specifically eligible because I don't know if you contributed to Social Security. So the most important thing to start with to know whether or not you're eligible or these rules impact you is to basically go look at a paycheck and see, were you paying Social Security taxes? Because if you were paying Social Security taxes, that means you actually are eligible for Social Security. But if you were not contributing to Social Security and your employer was not contributing to Social Security and gave you a pension in lieu, then you are not going to be fully eligible for Social Security and retirement. I would say here that I will not be on this call be able to tell you whether or not you're eligible, but the best thing to do here is to actually go back to your employer and really make sure you understand whether or not your employer was contributing to Social Security for you. So there's a couple provisions, and apologies that I'm going to use some acronyms here, but this is where Social Security starts to get kind of a little bit detailed. The first concept is what's called the windfall elimination provision. This applies to members who receive a pension from a job where you did not contribute to Social Security, and you had another job, maybe after you retired from public sector work, you had another job where you actually did contribute to Social Security, but you didn't work 30 years in that job. And what the Social Security says is, look, if you didn't work 30 years in a public sector job, you can't get both your full pension and full Social Security benefits. And so what they do is they apply some math and reduce your benefit on your Social Securities because you didn't work 30 years in the system. The maximum amount that Social Security will reduce your Social Security benefit associated with private sector work is about $560. So it's a real reduction, but it's not an elimination of your benefit. And again, for those of you that are thinking about taking up maybe part-time work or other work after a public sector job, just be mindful that there will be a reduction. But after 10 years of contributing, you will be eligible for a Social Security benefit. The second rule to be aware of for public sector employees is what's called the government pension offset rule. This is often referred to as the GPO. And this applies to you if you had a government pension, but it applies specifically to your spousal benefit. At the end of the day, the idea here is that the government will reduce your spousal benefits by up to 2/3 if you're receiving a pension. And so when you take a look at the right, what you'll just see here is that you calculate what your Social Security benefit is. The GPO reduction basically takes your pension and reduces your Social Security. So in this case, your pre-GPO Social Security might have been $1,200 a month, but after the reduction, it's reduced to $200 a month. So this is a very material reduction. And actually for most members is going to be the bigger reduction rather than the WEP. So you'll see that the member might have expected to receive a pension for $1,500 plus a spousal benefit of $1,200, but actually the combined benefit is $1,700, not $2,700. So that's actually a full $1,000 reduction. All right, let's talk about teachers. And I think that there may be some teachers from Nevada on the line. And so I do want to flag this in particular. There are 13 states where teachers do not contribute to Social Security. If you work in one of those states, then you are subject to both the WEP, this windfall reduction, and you're also subject to this government pension offsite. Again, the WEP applies to you if you had part-time work after perhaps working as a teacher, and the GPO applies to your spousal benefits. If you were not a teacher in these states, typically the school district actually did pay into Social Security on your behalf, and also you were paying into Social Security, and so you will receive your benefit. All right, let's talk about what work does and does not contribute to your earnings history. So a lot of folks on this call maybe either currently are doing part-time work or are considering part-time work. What I want to just talk about is like what work actually contributes to the earnings history when we talk about that 35-year track record that you need to generate to get the full retirement benefit. The starting point I would just say is if you don't have, if this isn't taxable income, it's not going to count towards your earnings history. So work that you do as a unpaid volunteer doesn't count. Any undocumented work, so if you're doing work for cash, it's not classified as taxable income, therefore it hasn't contributed into the system. Any unpaid caregiving, maybe times that you've spent with children, times that you've spent caregiving for family members. If you're not receiving taxable income for that work, then it does not contribute to your earnings history. And again, we've talked about these public sector jobs. The work that does contribute to your earnings history is full-time work and part-time work. And I want to just double tap that part-time work does count. So every dollar of income that you're receiving is counting into your earnings history. And so just know that if you are considering part-time work, perhaps as a bridge into retirement, that it can actually still help with your earnings history for Social Security. One thing to flag is that if you've already elected Social Security or you're thinking about electing Social Security before your full retirement age, there is a limit on how much Social Security allows you to earn while also receiving Social Security. And so if you earn more than in this year, $21,960, Social Security is going to withhold $1 of every additional $2 earned for every additional $2 earned from your Social Security benefit. And this unfortunately is just this like reality of Social Security rules being written when there wasn't a lot of part-time work. The initial concept there wasn't an expectation that members would be filing for Social Security and working part-time. It was intended to be this benefit like once you were fully retired. Obviously, modern retirement looks very different. And a lot of folks are, retiring from a full-time job, moving into part-time. What I would just say here is just be aware that this earnings cap is there. It doesn't mean that your benefits are going to be taken away forever, but they are being withheld and will be paid back to you once you hit full retirement age. So just an important concept to keep in mind, particularly if you're really thinking about like the specific numbers of your cash flows between the age of 62 and 70, that you do need to be mindful of that earnings cap, because earnings above that will result in your Social Security being reduced and then effectively pay back once you hit age 67. All right, this is the topic that I know frustrates a lot of folks, which is taxes and Social Security. I think many of us, when we have a W-2 income, we're thinking about Social Security as like one of the taxes in our paycheck. And so I think many folks are pretty surprised when they find out that Social Security is actually taxed at retirement. So yes, your Social Security benefits are taxed. Up to 85% of Social Security benefits can be taxed at the federal level. One thing I would just flag for you is that the taxes are not automatically withheld from your Social Security paycheck. So you do need to file additional paperwork to get the Social Security withheld. If you don't do withholdings, you will be forced then to do quarterly estimated payments. I would just flag that to you, that if you haven't done quarterly estimated payments, that kind of additional burden of doing kind of tax paperwork on a quarterly basis may not be worth it. And it may just be easier to set up withholding similar to how you have withholding on your paycheck today. The amount of Social Security that is taxed is based on your income. If your income is less than $32,000, and this is an example of a married filing jointly. If your income is less than $32,000, Social Security is not taxed. If your income is greater than $44,000, up to 85% of your Social Security is taxed. Social Security is taxed in certain states. Again, I think for most folks that are on the phone today, who are dialing in from Texas and Nevada and Michigan, your Social Security is not taxed at the state level. But if you end up moving in retirement, really important to know that where you move to, there may be different tax rules. And so I just flag here that there are 12 states that tax Social Security. I wish it was as easy as just saying there was a flat tax rate, but every state has their own set of rules. Some offer some exemptions. Some have some tax credits to help offset the Social Security taxes. And other states like Minnesota actually tax every single dollar. And so this is a place where like the devil's in the detail, but I just flag it that if you are considering moving in retirement, just make sure to factor in whether or not your Social Security check will be taxed. All right, so we're getting kind of towards the end here. We're going to start wrapping up. I'm giving you that warning so you can start getting your questions into the Q&A. I want to just talk about just a couple big concepts to really think about as we kind of move into the Q&A. And it's really things that you should know depending on your different age to help make sure that you maximize your retirement benefits. The first thing we're going to just focus on is members in their 20s. So again, we've talked about these concepts, which is Social Security is based on your top 35 years worth of earnings. Really want to flag the work that does not contribute to your earnings history. So again, if you're not paying taxes on your work, it's not contributing to your Social Security earnings. That's like the simplest way to think about it. Any undocumented work, any unpaid caregiving, and again, certain public sector jobs may not contribute to your earnings history. But the work that does contribute to your earnings history is full-time work and part-time work. All right, let's talk about folks on the line that are in their 40s. So some of the things, again, think about, again, is this earnings history. It doesn't have to be a straight line, 35 years straight. It can be on and off. As long as you add up to 35, that's where you're going to maximize your earnings. Similar to what I spoke about for the folks in their 20s, the work that does not contribute to your earnings history is going to be this undocumented work, unpaid caregiving, certain public sector jobs. Again, full-time and part-time work can help grow your earnings history. I do want to flag here the marital status impacts your benefit. And so if you're in your 40s and you're thinking about getting divorced, would just flag for you that 10-year mark. Because if and I've unfortunately had to counsel family members here, if you're kind of getting close to that 10-year mark, it may make sense to really just think about the timing of the filing for your divorce and the kind of the full closing out of the proceedings to really make sure you give yourself that optionality to have that divorce benefit later on in life. This is one of those, I know, divorce is a very emotional and often traumatic experience to go through, but I would just encourage all the women on the line to also just be thinking really not only about the short-term financial implications, but the divorce benefit here is an example of like a few decisions here can maybe help really set you up for additional security later in life. Now let's talk about what you need to know in your 60s. So we've talked about this unfortunate aspect of Social Security being taxed. And so that's just like as you're doing your income and planning for retirement, would just flag that for you. The second thing is just as you get close to like making your election, I really want you to think about Social Security as longevity insurance for retirement. Men and women, but women in particular are living longer. Women are living 10 years longer than their parents did. So it's on one hand, it's a wonderful thing that we all have more life to live. But on the other hand, you need to make sure that your savings last longer. And one way that you can do that is to be really thoughtful about that election. So really thinking about, do you elect at 62? Do you elect at 67? Do you defer your election until the age of 70 to give you that additional retirement income? Again, Social Security is there for you whether you live to 80, 90, or 100. As a reminder, work that contributes to your earnings history, it's full-time work, part-time work. So let's say you've decided to stop working, sorry, we decided to stop working full-time, but you're thinking about working part-time for a few years, that earnings history can potentially replace lower income earnings earlier on in your career. Social Security does adjust all of your income streams for inflation. So it really thinks about what they know is that a dollar earned in 1970 is not the same as a dollar earned today. And so they are going to adjust all those earnings to really make them kind of consistent with kind of what our earnings history looks like today. Finally, I just want to double tap on for those members on the phone that are married, that marital status does impact your benefits. If you're eligible for a spousal benefit, would really encourage you to think a lot about this joint decision making. Oftentimes, members really think about their own benefit and making a choice for themselves. But if you are married, this is really a very important joint decision to make, because one of you will be eligible you'll both be eligible for spousal benefits, and one of you will be eligible for a widower benefit. And really understanding what that might look like for your partner is really important as you do your retirement planning. Again, if you were married for 10 years and you have not remarried, you're also eligible for divorce benefits. All right, so we went through a lot of detail there. Want to just remind everyone that, for follow-up, that all of this is in our new retirement school class, which is what every woman needs to know about Social Security. So particularly those mathematical examples that we had on the WEP and the GPO, those were the reductions if you were a public sector employee. All of that is in the class so that you can kind of double tap and look a little bit more in more detail. So I'm going to pause there. I know, Josh, we've got some questions in the queue, so why don't we start with them and kind of dive in?
We sure do have some questions. All right, so here we go. First question is from an individual. Her spouse is not a U.S. citizen and is 66. Social Security told her that when she turns 62, her spouse's Medicare Part A will be covered by her Social Security, and she is not required to start drawing Social Security at the age of 62.
Yeah.
Can you explain how this works?
Yeah. So that's so let me maybe just take a bit of a step back. So Medicare, everyone applies, you each apply for Medicare individually, but there is this concept of a spousal benefit, which I think, Michelle, is what you're referring to, which is your partner or a spouse is not a U.S. citizen, therefore perhaps has not paid into Social Security or met that 10-year mark, but they are eligible for Medicare based on your earnings history and the fact that they're married to you. So the first thing that it sounds like what they're saying is that once you turn 62, which is the year that you start becoming eligible for Social Security, that your spouse is able to enroll in Medicare. The second thing is that what they're saying, which is really good, is that you aren't required to actually elect Social Security in order for your spouse to be able to be eligible for Medicare. So as a reminder to folks on the line, you enroll in Medicare when you're age 65. So what's happening here is that your spouse is able to elect because he's over the age of 65, but you're not being forced to draw on your benefits. So that's really good. You don't want to be forced to elect Social Security just to enroll in Medicare. So these are distinct decisions, but you are eligible as a result of Social Security that you've paid into the system. Typically the way Medicare works is that if you're 65 and you've already enrolled in Medicare, Social Security actually automatically withdraws your Medicare premiums, your Part A and your Part B, from your Social Security benefit. And so you just receive a net payment from Social Security. In this case, Michelle, what I would expect happens is that your spouse is going to be getting either a monthly or a quarterly bill from Medicare to pay the Part A and the Part B. But once you enroll, your Medicare costs will actually be automatically deducted from your Social Security. But again, I guess I would just double tap on, you don't have to be enrolled. You don't have to have elected your Social Security to enroll in Medicare. There is some eligibility crossover, but you are not required to actually elect Social Security to take Medicare. I saw that myself with my own dad. My dad was able to defer his Social Security until the age of 70, but he elected and enrolled into Medicare. at age 65. So for the first 5 years when he was on Medicare, he actually had a bill that came from Medicare, I think every month. But once he enrolled in Social Security at age 70, then Medicare stopped sending him a bill and just deducted the Medicare costs from his premium.
All right. And I put this in the chat too, but if you guys are asking questions under the anonymous tab, that's perfectly fine. But if you could please send me a private message or email community@itcu.org with your contact information and your question, just in case you would like us to have Silver reach out to you. You don't have to, but it does help. And if you are on the line and you want more information, you can send that to there too, or you can visit the link in the other chat and contact Silver directly. All right. Our next question is, she spent 20 years living and working in a foreign country where she contributed to that country's equivalent of Social Security and not the US's. Is there any way she can contribute for those absent years to her US Social Security?
Yeah, so this is one where I would love for this member just to maybe send us your email address so we can give you some specific links for the follow-up. But there are basically treaties between the US and many foreign countries that basically will give you credit for the time that you spent abroad. I personally am impacted by that because I spent 7 years of my career working in London. But when I was working in London, I was paying into the UK system. And so I get a credit for that on the US side. But if you can just drop your email address in to Josh, I will follow up and get you the link so that you can just check and see whether the country you are residing in actually has that dual reciprocity.
I think this is a question, could be a
Yes.
statement, but it says contractor/1099 work does not contribute Social Security. Is that
No,
correct?
yeah. And so the answer is actually so as long as you pay taxes. So if you I know my contractors at our company, we process their bills through payroll, and then they're responsible for filing their taxes and paying their Social Security taxes. So as long as whether it's 1099 or contractor work, as long as you are taking the next step and actually paying into the system, then you are eligible. If you are doing contract work where you're not paying taxes, that's the scenario where you will not be covered by Social Security.
All right, next question is, does Social Security reduction apply if you receive part of a pension from a divorce from an ex-spouse with a government pension, even if you worked 35 years on your own?
Okay, sorry, I'm going to read this to myself one more
Yeah.
time because this is very specific. Pension. So, I'm sorry, I'm just processing this one. So the answer here is and again, if I can just get this member to drop their email address in, because I want to just triple check, but my understanding of the rules is that when you really think about everything I explained today, it was about you being the government worker. And what you're saying here is that you're receiving a pension from your spouse. And so that's actually a different fact pattern, right? So it's not that you were the government employee, it was that your spouse was the government employee. So all the rules are really written about you being the government employee rather than the spouse. So I want to just triple check one or two things, but my understanding is that the rules that we work through today actually don't apply to you. The one, I guess, nuance I would just say is that your spousal benefit is based on your ex-spouse's, or your ex-spousal benefit is based on your ex-spouse's earnings history. So what's likely to happen in your fact pattern is that your spouse's benefit has been reduced as a result of the government work that they did. And therefore your ex-spousal benefit may be lower because they're not getting a full credit. So there is this, what I would just call it ripple on effect, is that you're being impacted by the rules because your spouse's benefit has been lowered as a result of the rules that are directed to them specifically. I can follow up with you there, but again, I would just say that there is an impact because your spouse's earnings history will have been reduced by the rules, but we can send you a couple extra fact patterns or a couple extra links there just to make sure that you're set.
Awesome. All right, next question is, if you retire from your work prior to 65, for example, at age 62, and then you work part-time for 3 years, will that part-time then lower your Social Security since that income will be less than what you're making at full time?
So Caroline, that's a good question. So again, when Social Security runs the calculations, they're going to pick your highest 35 years worth of earnings. So any dollar that you're adding into that can only be a positive. It won't take things away. So let's say you only worked for 30 years full time, and then you're adding part-time work in. Actually, a part-time income is better than a zero. The other thing though is that if you worked for full 35 years and now what you're earning part-time is lower than those earnings history, it won't be added into the system. So it can only be a benefit. It can't be a negative.
Say the same thing about people earning an income before retirement. Earning an income is better than no income, right?
Yeah.
Next one we have, do you have a choice or can you get both on the divorce benefit? Meaning if my ex made more, can I get his benefit, but if I made more, I get nothing
Yeah.
from him?
So Teresa, it's a great question. So the good news here is that the government gives you the greater of those benefits. So you don't need to worry about you being forced to take your ex-spousal benefit. You would only take that benefit if it would be higher. And again, the government is going to give you the greater of those two benefits.
This is a good question. What is the best time to request your Social Security
Yeah.
benefits? Would it be 3 months before?
Yeah, so that's a really good question, Donna. And like I think we live in a world where there's certain things in life, with the new technology age that we live in, that you can get like things can happen in seconds. Sadly, with the Social Security Administration, things do not happen in seconds. So you can file up to 4 months in advance, but I would encourage you to apply no later than 1 month before the month no later than 1 month before when you want the benefits to start. So I would say a minimum a month in advance, but you can apply as early as 4 months in advance.
Right. And then we got is there an absolute maximum or cap amount that you can receive in Social Security if you retire at 67?
So Stephanie, there actually is a full cap. So in this year, and it gets adjusted every year based on inflation. But for example, in 2023, the max benefit is $3,627 if you retire at age 67. If you were to retire this year and you were age 70, the max benefit would be about $4,500. So there is an actual hard cap on the amount that you can earn from the benefit, but it does get adjusted every single year according to that inflation adjustment.
Right. And this one is quite long and very specific, so I will try to keep everything as kosher as we can here. So this individual is a single public sector employee at a county level for the last 18 years. Prior to that, she contributed 14 years. According to her statement, she has the required credits. She's not about to retire, although she wishes she could. I like that. I like that sarcasm there. That's cool. In fact, she's seeking part-time work in addition to her full-time. Okay, so 2 jobs. And let's say I work another 12 years, so she would be about 66 when that happens. Would I qualify for the maximum benefit? And I'll let you answer that part, Rhian, because there's a second part.
Okay. Yeah. So and Angela, first of all, thanks for asking that question. It's obviously it's detailed, and I think understanding these nuances is really important as you think about your benefit. So the way that the windfall elimination provision works is that you are not subject to it if you have 30 years worth of private sector work. So you'll be pretty close. You're saying you have 26 years, but I can follow up with you with an example afterwards to show you what the dollar difference will be. But what I would just remember here is that, like, off the top of my head, like the maximum reduction is about $580 or $560. My guess, and I'm gonna, I'd have to go through an example for you, is that, if you were that close, like you've had 26 years worth of private sector work, you're probably talking about $100 or $200 reduction. But I'd be happy to go through the specifics with you. But again, as long as you work 10 years, you do get a benefit. It's basically, there's just like a sliding scale between 10 and 30 years of private sector work if you've also been a public sector employee. And so we'll get you that scale so that you can just see what the specific impact is. And then I see this question here about Medicare. What I would just say here is, and we'll follow up with something specific. So the question here is about, I think my retirement plan includes Medicare, healthcare, so I don't believe I need to apply for Medicare benefits. I'm going to send you some details here, but typically you still do need to enroll in Part A and Part B. There are some pretty serious penalties for not enrolling. And so really want to make sure that we understand what your healthcare plan actually includes so that you don't find yourself at age 70, having to make a retroactive election into Medicare, because the penalties are not one time. The penalties for late election of Medicare actually live with you for the rest of your life. So Angela, I'll send you a class with some specific details there so you can understand. And importantly, you'll want to go back to the healthcare plan or to your retirement plan to really make sure that you understand what they are and are not providing.
Thank you. I'm glad we're recording this because I'm gonna go back and listen to that again because that was a good question.
Okay.
All right, next one is she's been married for 5 years and her spouse passed on. My condolences. She started collecting, or he started collecting at 62. My understanding is she is eligible to retire at 60. Once she starts collecting and past age 60, can she remarry, looking for medical benefits until age 65, or would my Social Security payment be reduced?
So Raylene, I'm gonna, so it's a really good question. And what I just want to triple check for you is there is an option for you to be able to actually keep your widow benefits and get a benefit as you remarry. I just want to triple check what that age limitation is, because it's based on a certain age. And so I'm going to get back to you, Raylene, with the answer of, what that age is that you need to, that the exception qualifies.
Right, and then from here we have, does your ex-spouse have to retire before you can collect?
Yeah. No, that's Elaine, good question. So it's actually, so there's a couple different paths. One path is that you're eligible, you've hit if you were married for 10 years, you're age 62 and your spouse or ex-spouse has already elected Social Security. So they've already elected, then you're in the clear. If they have not elected Social Security, the rule is that you need to be 62 and have been divorced for 2 years, and then you're eligible to make your election.
For those of you asking for my email address, it is in the webinar chat. That email address is dedicated just for our webinars, so it will come to myself and my team. So someone will get back to you or connect you with the team at Silvur. All right. Another anonymous question. How does being an independent consultant paying both halves of Social Security myself impact my 35 years of earnings? Ooh.
Yeah. So look, if you've been an independent consultant and you've been paying both halves, right, the 6.2 on both sides percent, you're eligible. So you've been paying into the system. So this is the example I was making, which is like you're paying your payroll taxes. If you're paying your payroll taxes as an independent consultant, like you have been building your earnings history in Social Security. So, so you're in great shape. And you should, when you go onto the Social Security website, you should see your independent consulting income showing up as your earnings history.
Another anonymous question. Her husband died at age 74. Again, our condolences. And he was collecting Social Security. She filed for benefits when she turned 60 after losing her job. And she wants to know if she understood that you said that as a widower, she can draw 100% of his Social Security because she's only getting partial payment now, which I was told was his spousal benefit,
Yep.
and she's looking for the difference.
Yeah. So assuming you're now 62, what I would just flag here is that because you elected early, you're eligible for 100% of the benefit, but it will get reduced because you elected early. And so I think what I would just suggest is that you need to go back to the Social Security office, and I would do this in person. And I think you just need to clarify, are you getting the widow benefit, or do they still have you on the spousal benefit? Because they may need you to file your marital, your marriage statement and the death certificate, which they probably already have, but just to link up the two. But again, if you do elect early, you do get a reduction in that widow benefit. The full benefit is eligible to you when you're age 67. But again, an early election will permanently reduce that benefit.
All right, we got another ex question.
Mhm.
So if you remarry,
Yeah.
do you get any money under your ex-spouse?
Yeah. Once you remarry, you're not eligible for ex-spousal benefits. For folks that have had two divorces, you actually can, in many ways, what I would call forum shop, which is pick the benefit that's highest. But you are not eligible for ex-spousal benefits once you remarry, assuming you are still married to that individual.
All right. Our next question is, if I claim my husband's benefits as a widow at age 60 when I'm eligible, would I be able to switch my benefits when I
Yeah.
turn 70? And how
So
does that work for the
yes. So Shobna, that's really, really great that you're like in the weeds on that detail. And the answer is yes. So this is one of the rare exceptions that you can switch between benefits. There used to be these concepts. And sorry, Josh, do you mind being a little slower in answering these on because I
Oh,
can't see
sorry.
them once you close them. It's okay. I'm going to pull it back up and find it. But Shobna, when there have been a bunch of exceptions where you can't switch between spousal and earned benefits, but this is actually one that has not been shut down. So you are able to receive your widow benefits and then switch to your own benefits at age 70. And Shobna, I would just say that that's a really savvy choice to make if you can, because what you're able to do, as you probably well know, is that you're able to receive that benefit in your 60s, but really keep growing your own personal benefits so that you're getting that longevity insurance. And so this is one of the exceptions that, again, is in the weeds. But for your fact pattern may be a really great way to build that additional retirement benefit by delaying your own benefit. All right, we got the next one, Josh. Josh, are you still there? All right.
Sorry, I was
Oh,
on
that's
mute.
okay. Okay.
This is actually a good question, only because in my own personal experience with my family and their friends, a lot of people are retiring in the US and moving to retire elsewhere. How would they get their Social Security benefits if they are living outside the US now?
Yeah. So you still just apply. And so you do not need to reside in the United States to receive your Social Security benefits. If you've contributed into the system and you decide to retire in Mexico or Portugal or whatever amazing destination you're thinking about, you still just apply through the Social Security office. And remember, Social Security is direct deposited into your bank account. So what you will need to retain as a US bank account, I'm not sure whether they can do direct deposits into offshore accounts. My hunch would be no. But I'm happy to check that for you after the call.
Awesome. And then follow-up question is, views on the longevity of the Social Security system given recent political positions in the media? That's a
So Michelle, this is a really, really important and good question. So many of you may be aware that in the 2024 budget, President Biden had announced that he had some significant reforms that he was looking to undertake to make sure that both Medicare was solvent and that Social Security is solvent. Right now, the Social Security Trust Fund will not be fully funded starting in 2035. What I would just say here is that, like, I don't sit in Washington, and so it won't be able to give you like the guaranteed answer, but it would be very bad policy whether you're a Democrat or Republican, not to make sure that Social Security is fully funded. I think the real debate, to be very transparent, is how are you going to do it? The Democrats feel very strongly that it should be that the solvency of Social Security should be addressed through additional taxes on high income earners. So today, the first $140-ish thousand worth of your income is subject to Social Security tax, and income above that is not taxed. So the Democrats would propose that, look, we should be taxing more of higher income earners' income and contributing that to Social Security. The Republicans on the other side, I think, would like to see some changes perhaps made to the program, likely things like changing the full retirement date, so maybe pushing it out a little bit as a way to solve the solvency for Social Security. I don't know what the answer is going to be, but what I would say to you is that typically when Social Security makes these changes, they don't retroactively change the benefits for folks who've already elected. What they typically do is they have a date as of which the new rules are applied, and from that date forward, the new rules will apply. One of the things that we're doing with In Touch is really making sure that members are aware of how these changes may impact them and how the rules are progressing. We're not going to get an answer in the next couple of weeks. This is going to be a highly debated topic in Washington. And so I expect that it's going to be really December. It's going to be one of these last minute, right before the holidays decisions that come through as you see major negotiations between the parties.
And to compliment Rhian and her team, if you signed up through the program, you will get email updates, and they have even been keeping us very well informed of things that even happened at the beginning of this year from late last year. So the team at Silver is very much on the ball, and we really appreciate that. Right. The next one is, how do you determine if your ex-spouses, they were married for 10 years, over
Yeah.
10 years, benefits are greater than your own?
All right. So Stephanie, this is where unfortunately I don't have great news for you. And I would just attribute this back to this is where Social Security has not fully modernized. If you go on the Social Security website and you create your own profile, which I would recommend that everyone does, what you're going to see is your own benefit and your own earnings history, but there'll be no information there about spousal benefits. So whether you're married or not, the only thing you're going to see on that site is your own earnings history. This is where, unfortunately, like my understanding right now is that it's not until you make an election that you'll learn whether your spouse's benefit is higher than yours. You know, depending on what the relationship is with your spouse, your ex-spouse, you may or may not be able to get information from them to help you understand what the benefit is. And so this is where you're gonna have to go down to the Social Security office, have the conversation with them, but they're not going to disclose your ex-spouse's earnings history. But what they will do is they will give you the information to let you know like what that benefit could be. Again, this is one of the areas of like major reform that we need and something that I personally feel very strongly about. So it is a little bit of extra work here, and which I know you're gonna find it frustrating. What I would just again tell you though is that the government's going to give you the higher of the benefits, but I know in your decision making process, understanding what that benefit could be is really important. If you have a sense of what your spouse's earnings history was like, we do actually in our Social Security calculator in the experience with In Touch, we do actually factor it in for you. So if you have that information, you know approximately what they were earning, we can help you kind of get into the right ballpark. But again, it won't be 100% accurate unless we know the full earnings history.
Thank you. And for anyone interested, I put the link to create your My Social Security account in the chat. I agree with
That's a great
Rhian.
idea. Yeah.
I have one. I created one when I got my first little thing in the mail about this is what it's going to be. And I'm like, that's it. So it's in the link for everybody if you don't have one for yourself. Next question is, I worked at a hospital about 7 years with a pension only, but a majority of my 30 plus years of work has paid into Social Security. Does the windfall elimination provision apply?
So the windfall elimination provision apply, but if you're saying so the windfall elimination provision applies if you don't have 30 years worth of earnings in the public sector, right? So sorry, in the private sector. So let me restate that one more time. So the windfall elimination provision applies if you had a public sector job with a pension, and then you had private sector work. If you had less than 30 years worth of private sector work, then the windfall elimination provision does apply. Laura, we actually have a class in the retirement school that specifically goes through the different like the table that applies based on the specific number of years so that you can actually see what the exact reduction would be.
Thank you. All right. If one should die before electing their Social Security benefit, does the non-U.S. citizen spouse still receive beneficiary benefits?
Yeah. Michelle, this is one where I'm going to have to follow up for you. Typically, your spouse would need to have been married to you for at least 9 months and be age 60 and not have remarried in order to be eligible for the survivor benefits. I just want to triple check the non-citizen piece just to understand whether that might change the fact pattern. And so, Michelle, I'm going to follow up with you there just to get you the right answer. All right, Angela, I see your comment. What I would just say there is just go to the URL ITCU marital.silvur.com, and we'll start sending you like all the information you need to make these decisions. And so we're really committed to making sure you get what you need to make these important decisions.
Awesome. Rhian, this one is, I expected this one only because of some recent, changes in the last 10 years. How does Social Security spouse beneficiary work for same-sex couples?
Yeah. So really, really good question. And so the good news here is that since June of 2015, Social Security has made benefits for same-sex couples available. The key thing here, and I'm just pulling it up right now, just so I get the technical terms correct, is that you need to, well, I guess the easy fact pattern is that you are married. If you are in a non-marital legal relationship, like a civil union or a domestic partnership, you may also be eligible for benefits. If you're comfortable dropping your name over to Josh, I will actually get you the specifics, because if you fall into that, like, I'm not married, but I have a non-marital legal relationship, I want to pass you the information so you know whether your specific non-marital legal relationship will actually result in eligibility for Social Security.
Thank you, Rhian. And yes, it also depends on your state too, because
Yep.
each state has their own definition. So
exactly. So that's where, again, this is one of those in the weeds, and I want to help you get the answer that you need.
Right. Raylene, you're welcome. I'll say you're welcome from In Touch. Won't speak for Rhian, but I'm sure she's thankful. Says you're welcome as well. So our last question for now is, we have, if I claim my Social Security benefits at 62 and I'm penalized because I'm still working, will the amount that I'm penalized be paid in a lump sum at age 67 or prorated over the years? And then there's a second part, so I'll let you answer that part first.
Yeah. So so you will not get paid out in a lump sum. It will get paid out over a few years. And what I don't know off the top of my head is how many years it takes for them to pay it back, but I know it isn't a lump sum. So Stephanie will follow up and just let you know how many years it takes to actually get the money back. But it is paid over a certain type of years, and I just don't know off the top of my head what that is.
Awesome. We made it through. We only had like 4 questions and it kept going, which is awesome.
Yeah.
Everyone who listed questions, thank you. That's what we're here. That's what this webinar program is all about, is to answer the questions you have, and if they're specific, we'll catch up with you offline. But thank you all for those great questions. And again, we'll follow up with those who have emailed me. Some of you already emailed me. Thank you very much. For Rhian and David. And
Yeah, and I was just going to say, Josh, just to maybe wrap up, is that the fact that these questions were really detailed, and I just want to say kudos to everyone on the line, because what this shows me is how committed you are to making sure you understand your benefits. We started out the conversation talking about what a significant portion of most members' retirement this is. Unfortunately, the government does not make it easy to understand this. I was actually inspired to build my company because I was helping my own father navigate retirement and Social Security specifically, and was just appalled by the complexity of the Social Security legislation. So I just want to let you know that we're on your side. We're here for you. We're thrilled to be partnered with In Touch. We're going to get you the information you need. As one of the questions alluded to, unfortunately, the bar is always shifting. And so I'll not only commit to providing you the information you need today, but as the rules change, we'll make sure that you're getting that information so that you can make, the most up-to-date choices based on where the legislation is.
Yep. And again, if you haven't already, please go register your own profile at itcu.silvur.com. I did it myself. I am nowhere near retirement age, but like Rhian, I went through this with my dad, so I'm like, I want to get on the ball now. But it's very interesting to learn. It's very interesting to see, and as one of the licensed counselors here at In Touch Credit Union, I have gained a much greater respect for people going through this process. So I have learned a lot myself. But Rhian, thank you for being here. Thank you to all the teams at Silvur for everything you guys do for us, and more importantly for our members. They are truly what matters at the end of the day in credit union world. And we can't wait to see you for the next webinar coming soon.
All right. Thank you all so much.
Thank y'all.